from our vantage point, when we founded Bestow, our view is that property and casualty and health insurance had actually modernized faster than life and annuities. There's a lot that's happened over the past 5 years in our
Yeah.
space, but I still think there's so much room to grow. If you look at like cross-sell opportunities or really bundling products, when life insurance is truly digital, it becomes a lot easier to bundle with another form of insurance than kind of the offline analog process that's always been there. Hi, I'm Melbourne O'Banion, the co-founder and CEO of Bestow, and this is the future of insurance.
It's good to sit down with you. I was telling you before we recorded, a little bit rare for me to have someone from the life insurance side. It's not as frequent, so that's just a special treat for listeners and viewers, right? It's a little bit different from the PNC that we spend so much time with, but I appreciate you coming on the show today.
Yeah, happy to join. Yeah, this is great, Brian.
So yeah, for those who don't know Bestow and you, if you don't mind, like give us a little background on yourself, but then also kind of journey for Bestow. And I know there's quite a few, or some kind of key strategic shifts along the way as you guys have evolved over the past several years.
Yeah, for sure. I'm a repeat entrepreneur. It's really kind of what I've done. I've started a couple businesses in the insurance space, a title insurance company and a health risk management company and some other businesses as well. We founded Bestow, my co-founder and I, in 2017, really with a vision of bringing software and modern technology to a very antiquated industry and helping life and annuities expand to millions of new customers. And the way that we kind of entered into the space was our vision was to really build a tech stack that enabled the digitization of taking a very analog industry and digitizing it. And our view was the best way to kind of enter the market was to build out our own tech stack and what we really view as the first truly digital optimized term life insurance product. And so we partnered with a reinsurer and an insurance carrier, and we developed a product and our own software and went to market in 2018 and started off on the consumer side of the business and really learned a lot along the way and had some shifts in our business model, but excited about kind of where we are and what we're powering for, on now enterprise partners and our carriers in the future.
Yeah. So your shifts were still in the same space, just kind of playing at it in different ways. So you started off was it an MGA or a marketplace for other policies? It was your own product with other backing. So an MGA, I would imagine, right?
Yeah, we started off as an MGA because we wanted the autonomy to be able to build our own software.
Mm-hmm.
So rather than just be a distribution arm and focused on just purely the front end, we built out our own application software. We developed our own underwriting software. We issued the policy, created all of the signature processes and binding for the policy, and then actually built out our own TPA software as well, all the way through claims. So we were a true end-to-end stack from the beginning. It was a pivotal decision for us because it was a deeper build and kind of took us longer to get to market.
Yeah.
But looking back, that was very strategic and important for us to have the learnings along the way. We started on D2C. I started exploring life insurance like before InsurTech was really even like a word.
I was gonna say, if you launched in 2017, that was like the word had barely, people are still debating, is there an E in the middle? Is there not? Like, it's still new.
Yeah. And, it was an interesting time because our vision was that we really wanted to lead the digitization of this industry. And at the time, most accelerated issue products had 15% or less eligibility.
Oh.
And so the throughput of instantly underwriting a life insurance policy was de minimis.
Yeah.
And the charge that we had was to really require everybody to go through a single application, to not require anybody to go to a fully underwritten process and get an immediate yes or no decision, which is a forcing mechanism for us to really improve our algorithms, bring in new data vendors, build out improved underwriting methodologies so that we can expand eligibility to initially really the D2C side of the business. And then we parlayed that into a lot of different fintech partners, Lemonade, Chime, MoneyLion, Stash.
Yeah.
We were distributing through all of them. And then we also started distributing through a lot of third-party distribution with IMOs and BGA. So we got, a lot of true omni-channel experience across multiple vectors and distribution channels to really learn in our platform and build really a unique tech stack and really improve funnel performance from the started application to submitted app to converted app. And that's really kind of where we cut our teeth and began as a company.
Yeah. So obviously, I know a bit of the story, so I'm cheating right now, but you've had an evolution from there, and along the way, I know you guys acquired your own paper, so
Yeah.
you're able to kind of be the carrier for a period, but you moved away from that, and so now you're a solution, right? You're the enterprise software that can run the digitized life insurance company. Is that what the evolution ultimately became?
Yeah. So over from 2018 really to a few years ago, what we found is that as our platform expanded and our capabilities and features were really proven out, we ultimately needed to make a decision. Are we going to really focus on building our own brand and distributing directly in the market?
Yeah.
Or are we going to license our software and enable these solutions to carrier partners that really need a new modern tech stack that is difficult for them to find within the space?
Yeah.
And ultimately, what we decided on is we kind of dipped our toe in enterprise initially with our initial partner was Equitable, and they've been a great partner for us. And we launched a term life product with them to their captive advisors and really got some significant learnings and throughput. This was over 3 years ago.
Yeah.
Ultimately, we got confidence that we had kind of climbed up the credibility wall sufficiently enough with enterprise partners that we could sit at the table with them and say, we have something really unique to what you either have built internally or what you can find with another software provider. And
Hmm.
it's a single unified platform that allows for them to generate many benefits along funnel performance, efficiencies, product launches, iterations within the market, and then capturing all that data end to end rather than have it, siloed in different
Yeah.
data silos where they can really generate intelligence and business insights that otherwise would be very difficult for them. It was by nature for us because that's how we built our platform. But
Yeah.
ultimately, what we concluded is that there's a massive market on the enterprise side that we could pursue, but it was quite a different business than being a single tenant just going on the consumer side of the business.
Yeah.
So for a period of time, we were our own carrier. We were selling directly in market on our own paper, and then we were starting to launch and scale enterprise partners. And then we were, as a small, company and growing, we had to really, on a quarter by quarter basis, look at where are all of our resources being allocated
Yeah.
towards. And there was so much demand on the enterprise side that ultimately we concluded that that is the opportunity that we want to pursue, enabling and empowering carriers, leveraging our tech stack that's highly differentiated in the market, and then helping them launch new products and scaling those products with existing distribution channels. We sold our carrier last year to Salmon's Financial Group, which was a great
Yep.
transaction, and we have a great partnership with them. And now we're 100% focused on our enterprise partners and scaling and growing our solutions in the market.
So this journey is so fascinating to me because I've talked to a number of players who get to that place where they built something themselves platform wise and they have the insurance business and they see them as they're intertwined internally and then
Yeah,
they think that's a product externally and then they struggle to have success with frankly competitors to their insurance business to trust them to buy the platform whether it's good or not. I'm not passing judgment on it, I haven't seen them in action, but I was at a carrier that contemplated this is like early on in web-based solutions, still not cloud. It was on-prem, but at least it ran through a browser. And we
yeah,
were like, "Oh, this is incredible what we built." For some reason, the business side hated the system, but the IT side thought it was great. But they were
right.
like, "We should productize this and get
Mm.
some money back for our investment in it." And I was just like, "That's a terrible idea. First of all, it's not that good, and maybe it could be, but who's going to buy from a competitor?" And I see carriers come to that same kind of position and think you can do both, and then if they make the decision they get rid of the software side and they go down the insurance side. You went the opposite way. I think that's really fascinating. I'm just curious about, like, I hear you, like there was more opportunity on the enterprise side. um it must have been a tough thing to say, like, this is what we started with but we're going to walk away from that.
Oh, it was incredibly difficult. And we had built a very strong business on the
Yeah.
consumer side, and we could have continued to build that out. Ultimately, though, our view was that the market opportunity was much bigger for us on the enterprise side. Obviously, carriers in the life space, the vast majority of the large carriers have been around for 50, 100 plus years.
Yeah.
They've built brands, they have product expertise, they have distribution, right? Going head to head with them on the distribution side, right? There was a lot of funding that really went to alternative distribution. And I think that there's growth and opportunity there, but it's a subset, it's a single digit percentage of overall distribution. And in our view, we had developed something that really there's no other full end-to-end modern tech platform that's been built in really the past 2 decades in the life
Yeah.
and injury space. And so as we really spent a lot of time deliberating and analyzing the market opportunity and making the hard decision to move from consumer to enterprise. It was the best decision that we've
Yeah.
made by far because it opened up so much more potential in our business, and just so many aspects of the business is much better on the enterprise side than just going head to head with so many other lead gen companies and aggregators
Yeah.
and so on, and just trying to find leads and sales direct in the space. But we really sat down with enterprise carriers and said, what are your needs? And over again, they want to launch products faster. They want to iterate on those products. They have
Yeah.
demands from their distribution channels that it's just been difficult for them to keep pace, understandably, because they're so large and massive and have so many systems that they're still maintaining, that their IT teams largely are focused on maintaining existing systems. And
Yeah.
it's difficult for them to really like bring on new technology solutions and launch products and iterate on them quickly in the market. And that's
Yeah.
where we come in. We say, let us be an enabler and a technology provider. Back to your question of like somebody building something and incubating in-house and then kind of spinning that out, that's always difficult to do.
Yeah.
Understandably, where a carrier is going to look at some other carrier and licensing a software for them and saying, hey, well, are we giving you competitive intel? What data are you really learning from us? And how is this really like fast forward in the future around the bend? Like, what is this going to mean?
Yeah.
That's one of the reasons why we ultimately said, let's just exit the consumer business so we take that risk off the table for our partners.
Yeah. Um, I've got another kind of tough moment question for you, but I'm so curious if do you think you could build what you have today if you hadn't started with being in the consumer business and sort of like living the customer's life and the customer journey yourselves firsthand? Like I imagine that would inform a lot of good decision making around what solutions you really need to build that maybe you couldn't have gotten if you had just started as a software solution from day one.
Yeah, it's a very unique insight and a great question because typically the arc of a company and enterprise is not starting in consumer and then
Yeah.
shifting to enterprise. The contestable thesis that I think that we have, that I think now we've kind of proven out, is that in the life and annuity space, I posit that there's no way for us to be where we are without first starting in consumer,
Yeah.
because the learnings that we had in the D2C side and iterating on how to get somebody to start an application, how do we pull them through an application without an agent, how do we get them to convert,
Yeah.
and all of the learnings and improvements that we had in our funnel, that coupled with all of the applications and business that we issued in face value, we've issued billions of dollars in face value, we've had well over 1 million applications go through our platform.
Yeah.
That allowed us to get enough credibility to then be able to come over and talk to enterprise partners and have them feel like, okay, well, there's enough history here that I can feel confident putting risk on their platform.
Yeah.
That, as well as in the life space, right? You're underwriting for 10, 20, 30 years. The feedback loop is not nearly as fast as on the PNC side. The PNC side, within 3, 6, 9 months whether or not you've
Yeah.
accurately. In the life space, you need probably 3 to 5 years for actuaries to really look at the mortality assumptions and the actual mortality claims and
Yeah.
be confident that our platform is performing correctly. So
Yeah.
we feel like that kind of maturation of our business shifting from consumer to enterprise is really the only way for us to be where we are today, servicing the clients that we have.
I will say there's probably a bunch of PNC longer tail folks who are like 3, 6, 9 months. I wish it was that easy. But
Yeah,
your point
maybe
is valid.
so.
Yeah.
Yeah.
I mean,
Right.
outside of like some long tail workers' comp and maybe some GL, it's very rare that you're thinking beyond. I mean, med mal, I was in that for a little while. It's like 8 to 12 years. That's a really long time in PNC. It's
Yeah.
rare to find that. So yeah, I take your point. What I was getting at in that question was if there's a sense of regret, like, oh, I wish we had made this move sooner or didn't spend, but it sounds like actually you couldn't get to where you are or as successfully if you hadn't had that kind of evolutionary journey to begin with. So it feels like, and I could be wrong, but that there isn't a sense of like, oh, we missed the boat or, we made the wrong turn by doing it the way that we did, that actually it ended up
No,
being
yeah,
beneficial.
I think the path that we've tread and kind of where we are today, I don't look back and have any regrets. Certainly there are learnings and there's
Yeah.
mistakes, along the way, just like I think any founder would say, I wish that I would have come to this conclusion, earlier. But I think that how we're positioned and what we're doing with our partners today, is a culmination of a lot of the learnings that
Yeah.
we've had. I like the idea of a company's kind of value are all the learnings and ways that they've solved problems in their past, right?
Yeah.
It's like how many walls have you climbed, on top of or through or around, and particularly in a regulated industry. And we've learned a lot along the way, which I think just makes us who we are and allows us to partner and enable the solutions that we are with our clients.
Yeah. No, that's well said. Um, you have gotten to a good place. You do have quite a bit of success. You guys are a platform in a number of major brands from a life insurance standpoint, financial services standpoint. Um, I imagine that gives you kind of good vantage point about where the industry's heading. What are the, you know, AI, like I have to say AI or, no SEO juice will work on this episode, but where do you see things headed? Obviously, you saw that digitization path when it was still pretty nascent. What do you think the next frontier is, and what are you guys thinking about in terms of whether it's distribution or the products themselves or the delivery of them or all of the above or something else? Where is in particular life insurance going over the next 5, 10 years, and what do you think is going to drive that?
I think carriers are all looking for ways to modernize their products to differentiate both from a distribution perspective as well as for agents and applicants to just make it easier for them to get coverage and to improve their products by virtue of the way that the way their software is enabling either an application or underwriting or issuance. And I see this kind of shift with a lot of carriers, at least in the life space, into I think what's going to be an era of specialization. I think carriers are all looking at their book of business, saying, what are the products that we really want to put a lot of weight and investment behind? How do we
Yeah.
want to differentiate with them? What are we best in class at? And then what do we need to outsource and work with other companies that we may not, have the competitive advantages going forward. And I think that's where the combination of, them being the experts in distribution and product expertise and so on, and then ultimately making the decision, we're not a core technology company, and we're going to go outside to really go and partner with companies that can enable those solutions for us and help us be a better company and meet whatever objectives that we're pursuing.
Yeah.
I think that technology is just enabling that and accelerating that movement.
Yeah.
And it's a forcing mechanism, I think, for carriers to say, okay, well, what are we doing really well, and then what do we need to partner with somebody else? So I think that that's going to accelerate in the age of AI. I think that that's even going to like force the evolution and the turn of that even faster. We are really utilizing a lot of AI tools and solutions, particularly on the underwriting side. From a regulatory perspective, you can't necessarily, we've been early on in using predictive models and machine
Yeah.
learning and so on. But what we're really enabling for our partners is, tools like to help them process APSs and EHRs that much faster for their underwriters to be able to be much more efficient in the underwriting or post-issue audits in the life space. We have some AI tools that really, help underwriters just be much better at what they do and be much more efficient.
Yeah.
And then I just think there's a lot of tooling and solutions that'll be coming out just to help agents and the platform in and of itself be much more interactive and better for an applicant as they go through the process.
You said before you don't I can't remember if this is before we started recording or not, but you don't see agents going away long term. Like so that's kind of the prediction I've heard since my first day in the industry.
Yeah.
It was in PNC, but I think that I've been hearing the same thing in life too.
Yeah.
What's your take from a distribution standpoint? Will there always be a place for agents, or as long as you foresee it, or do you think there is a path that AI agents could be replacing, the human intervention or human interaction rather?
I think that, look, I think AI and this whole agentification,
Yeah.
um, yes, I think there will be more consumers that go directly online and consume products digitally without an agent. It's a small subset of the overall sales and growth of the industry, and I think will
Yeah.
continue to be a single percentage or single digit percentage or kind of max, upwards into below 20%. Being that it's a voluntary product, I think that the vast majority of people need an agent or advisor to kind of walk them through and help them understand the different mechanics and features and
Yeah.
product, options that they have. And I don't see agents and advisors going away. I actually think that they'll be more empowered and enabled with better solutions that help them, um, expand their book, work with their clients, and help them to kind of know their needs much better.
Yeah.
And I actually see a lot of growth with life and annuity and for like volume of policies
Yeah.
going forward as carriers like provide just better tools and solutions for their agents and advisors.
Yeah. I'm glad you brought up the voluntary aspect of it, because I think that combined with the lower penetration than compulsory lines like, auto insurance or homeowners, if you have a mortgage, there's so much potential for growth without having it come on the back of what's existing already. Like if you could expand dramatically with AI based solutions and people self-serving without doing anything to harm the agent space. And I think you're right that if you're also providing some of those tools on the agent side, that allows the agents to grow as well. So it doesn't have to be zero sum for this, because there's still so much room to grow from a market penetration standpoint in life insurance for sure.
Yeah, I mean, from our vantage point, when we founded Bestow, our view is that property and casualty and health insurance had actually modernized faster than life and annuities. And life and annuities, I think, is there's a lot that's happened over the past 5 years in our
Yeah.
space, but I still think there's so much room to grow. If you look at like cross-sell opportunities or really bundling products, when life insurance is truly digital, it becomes a lot easier to bundle with another form of insurance than kind of the offline analog
Yeah.
process that's always been there for the underwriting of life insurance. So to your point, I think that there's a lot of opportunities to innovate on product and expand in coverage and unique features as life insurance becomes more digital, in the coming years.
Yeah. You did mention something up front, and this is the last thing I'll bother you with, and then I'll let you get back to your day. But you mentioned up front about the platform enabling product changes and innovations, releases to the market faster. And you've been talking about, enabling, like, carriers turning to solution providers to enable their abilities going forward. And then I'm wondering about product innovation, and
Mhm.
like, what is that something where you think the carriers will use tools available to them to create new products, new solutions, or is it more like use the tools to connect into, like you mentioned, cross-selling? So is it, if I'm a carrier who has, X product offering, am I trying to innovate and evolve those products? Or am I saying, look, this is what I do, and if I need to round out with these other things, then I'm gonna, because I've got this tech, I can connect into other solutions and sort of bolt them on, white label, or what have you? Is it about expanding what I manufacture, or who's manufacturing it is irrelevant? I'm just trying to meet the customer's needs and I need the tech that would enable that. I don't know if you have a
Yeah.
position, and maybe it matters, every company's going to look at that differently.
I think it's a bit of both from
Yeah.
what we're experiencing. Understandably, I think carriers are looking at the products that they're currently selling, and like there's a period of refreshing that just needs to happen, right? Every
Yeah.
3 to 5 years, with the pace of technology and advancements and just improvements. I think downline distribution is saying, "Hey, we want to modernize. We need better product and better solutions." We're enabling that for our partners,
Yeah.
and then it's well. Now that I have this better product, what are a lot of other distribution channels that I haven't pursued or haven't fully monetized that I now can?
Yeah.
And then it's also a view of, well, how do I capture more of my market opportunity by launching net new products that I know that there's demand, but
Yeah.
maybe I just haven't been able to launch yet to date because it's just been difficult to get the resources to be able to launch a net new product. And it typically takes, a year or two. And with the Bestow, for instance, we can do it much faster. With one of
Yeah.
our, we literally launched a product in 4 months, which was just like unheard of.
That's super
for our
fast. Yeah.
partner. And we started in term, but now we have final expense. We're launching all these. We're having, by the end of 2025, we'll have pretty much every permanent product in market, and we're going to be launching Index Universal Life, and then we're going to be, shifting into simple annuities. So over time, we want every carrier to look at our platform and say, we can service really any major product on the Bestow platform.
Yeah.
And it's going to be faster to market. We're going to be iterate quicker. We're going to have new distribution channels. It's going to be less expensive. Like, there's going to be all these benefits of being on a single unified platform. And that's our vision and goal for what we're looking to build. But I think carriers are looking along all those vectors and saying, how do we differentiate ourselves and outcompete in the space? And it's going to require them to do something different in the future than what they've done in the past.
Yeah. I was just very surprised because when people talk about digital, it's basically always been term, and anything else is like, well, that's, now you're getting into things that are more complex. It's impossible. But if you're,
I think you're already seeing a shift, and you will see a continued shift to more simplified issue products that are leveraging the data that's available now in the purchasing process to make many more of these kind of more complex products, more transactional in nature.
Yeah. I mean, that's enabling the agents. Like, it's hard for an agent to deal with those more complex products with the processes they have to live with now. So if you're without disrupting the channels at all, right away, you've made agents more powerful or more capable by giving them easier tools, even for the more complex products.
Right. Well, and I know many of your listeners are, on the PNC side, historically, understandably, a property and casualty agent may not be all that motivated to sell a life product because just the time it takes to issue a policy.
Yeah.
And if we can make these much more transactional and easier for them, then I think they'll be more motivated to sell into a needed, product because they don't necessarily have to do as much heavy lifting.
Yeah.
Yeah.
I think it's all super interesting. I don't know if it's just because I don't get to live in it every day, so it's like it's novel to me. But I appreciate you coming on and, frankly, like sharing quite openly about that journey and the kind of progressive strategies that you built out to make that shift. It's not every day that we see that, and it's even less frequent that people talk about making moves like that. So I appreciate you opening up about it. I think it's really valuable because as I said, like, I see people making what I would say are the wrong decisions on that front. They're not easy, and I get it, but it's cool seeing how you guys have progressed, and I appreciate you sharing today.
Yeah, thanks, Brian. Good being with you.